Those of you who have never met Mwalimu before, my name is Dr. Joshua Aura. I teach at RCM College, and I happen to be running an auditing firm. Yeah, a composite licensed audit firm. Composite means what? That we have a license to do taxation, to do assurance services, that is the external auditing, internal auditing. We have a license in this case here for general advisory, business advisory purposes. I know that is something you guys do not know, right? We don't talk about it a lot because also, you know, as an assurance practitioner, marketing, I can't do the way I market RCM cannot be the way I market Aura and Core. No, not allowed. With RCM Online College, you can make as much noise as we wish, but for assurance services, our work, I mean, we should be able to sell ourselves. We believe in a different kind of marketing, which is regulated by ISPAC. So why are we here today? We are here today to look at something very, very interesting here, all right, called assurance and non-assurance engagements. In these 20 minutes, I would want us to just study what we call assurance. In this chapter, called assurance chapter, we shall be able to look at elements of an assurance engagement. We'll be able to look at the difference between reasonable and limited assurance. We have accountability, stewardship, and agency. And then lastly, we have the benefits and limitations of what here audit. Ladies and gentlemen, I would want you to appreciate the meaning of the word audit from the onset. That this auditing will be done by a person who is very independent of the parties involved. Now, assuming, for example, today I'm the director, and we have other directors, of course, at RCM. Now, apart from directors of RCM, we happen to be having many shareholders. All right? We happen to be having shareholders of RCM who are not directors. Ladies and gentlemen, remember, we could come like now this particular class, I can see we are about how many now? We are about 46. So if, for example, each one of us was to contribute 1 million Kenya shillings, then we shall end up getting 46 million total contribution. This 46 million is more than enough to start a very good college. And assuming we are selling each share at Kenya shillings 1 million, then we're going to have 46 shares. And assuming that each one of us will be holding 1 share, then we're going to have 46 shareholders. Now, is it possible for all these 46 shareholders to come and sit together and then they decide that, hey, you know what? We are going to stay in Nairobi at RCM's Sandbank House offices, and then we run the company, all of us. It's not possible. It's going to be a lot of noise in the system. Then what we could do, these 46 direct or other shareholders will say, hey, let's in this case here appoint, like say 4 of us. 4 of us to go and take a stewardship role. They steer these particular resources that we have to bring in students, so at the end of the day, we are able to grow what here our wealth. So the 4 guys becomes what here directors. The other 42 guys now, they will go on to do other things. They will not be involved in the day-to-day running of the company. They're just shareholders. They can only come to mingle with the company during the annual general meeting. In this annual general meeting that we'll be doing at the end of the year, we shall be able to look at these 4 ninjas. What kind of work have they done for us? If they've not done a very satisfactory work, what do? We remove them from office. We vote them out. We put new ones. So, ladies and gentlemen, remember, we are going to have so many stakeholders then at RCM. We are going to have, in this case here, for example, directors, the 4 ninjas who are now in the office. We're going to have shareholders, right? Who are now outside there. They have the company shares. They are waiting for a return on their investment. We also have students like yourselves here. So at the end of the day, These directors, the four ninjas, if you're not careful, because now they're the ones who are having access to monies generated by, monies contributed by the shareholders, the fees being paid by the students, these four ninjas could very easily get to enrich themselves if we are not careful. So we have to bring in somebody who is very independent, somebody who is not in this particular circle of stakeholders. This person cannot be a student of RCM. This person cannot be a shareholder. This person cannot be a director. This person has to be very independent to come and look at the work that has been done by the directors. What kind of work are they supposed to be doing? Amongst their biggest duties, ladies and gentlemen, is reporting. They have to prepare financial reports. They must prepare financial statements. So this practitioner, whose name is an auditor, will come and look at their financial statement produced by these four ninjas, the four directors, with a view of giving an opinion as to whether those financial statements are okay. So if they tell us that those financial statements are okay, then they are now giving us an assurance. It's like a comfort letter. They're giving an assurance to these other stakeholders who are out there so that now they can rely on the financial statements that are prepared by these four directors. All right. So the very first thing that we're supposed to appreciate as students of auditing and assurance is that this external auditor is an independent contractor. He is an independent practitioner who is coming to look at the financial statements produced by the management, the financial statement produced by the directors with a view, with an objective of giving an assurance service, with an objective of increasing the level of confidence for the users of those financial statements to rely, or of course not rely on them when making their decisions here. So we are saying here that the purpose of assurance is to increase the confidence of the user, is to increase the confidence of the user in the subject matter being relied upon. The subject matter, of course, as we shall be seeing, these are the financial statements here. There are people who rely on those financial statements for them to make, for example, investment decisions. Then in that case here, then we have the element of this assurance engagement, the elements. We have a tripartite, a three parties involvement. There must be three parties. That is the first element. There must be a practitioner, the auditor, who performs an independent examination of the subject matter against a suitable criteria and provides a written assurance report. He provides an audit report, which is also known as what here, an audit opinion. There must be a practitioner. This practitioner must be independent and is going to review the subject matter, the financial statement, against a suitable criteria. In this particular case, for those of us who are in East Africa, the suitable criteria here is the IFRS. And then at the end of the day, these people must give an assurance report. Then we have the intended user. Why are we coming to look at these financial statements prepared by these four ninjas, prepared by these four directors? We are coming to do that because we would want, ladies and gentlemen, some users of these financial statements to have more faith in them. We want to give them, to boost their confidence in these financial statements. There must be other stakeholders, especially the intended user, who will be, in most cases, the shareholders. I can see in this case here, chart, sorry there. I can see chart here. Great. Then I can see, great. Thank you very much, Yvonne. We shall be able to do that. Great. But up to now, are you guys able to follow what I'm talking about? So remember, we promised just 20 minutes. We promised 20 minutes, but nevertheless, I would expect students here to be following, flowing. Thank you very much. Then we have, in this case here, the responsible party. The responsible party is now the preparer. Those four ninjas, the directors, the preparers of the subject matter. So the first element of any assurance, it can't be an assurance engagement if there are not three parties involved. if the parties involved are two, for example, as our and call, we normally go in this case here to companies. Like now we did something last weekend at for some client here in Nakuru, right? So of course, these guys came and told us that they were directors of the company. They told us would want you to just help us to do what here? A tax computation. We have a problem with the KRA, and we believe that our accountants in this case have been able to do a great job, but these KRA people are bringing issues. Now, ladies and gentlemen, then, who is giving us this job? It is the directors of the company. The same directors are the ones in this case here who are what here? Users of those financial what here? Users of those financial statements. So then in that case here, it is us and the directors. Then that cannot be an assurance engagement. Because assurance engagement, we must have three parties. There must be the practitioner, our and the company, certified public accountants firm. There must be shareholders who are waiting to get this certified. Allow me to use the word certified. Certified what your financial statements. For now, I can use the word certified, but later on we shall be looking at, we don't certify like absolute. No. Then we have in this case the party you produced, the responsible party. And then number two, the second component is the subject matter. The subject matter, the information being examined, e.g. the financial statements. There must be a suitable criteria. The subject matter is judged against some criteria. So in this case, here's our and core CPAs. When we go to, of course, audit financial statements of a company, even in the annual report, we must state that we audited these financial statements against IFRS, International Financial Reporting Standards. So the numbers that you guys are seeing in these financial statements, do they comply to this IFRS? We must have what we call a suitable criteria. That's number three, suitable criteria. And then, ladies and gentlemen, we have here sufficient and appropriate evidence. Another component of any assurance, how do you expect me to give people assurance if there is no evidence? So we must be able to collect what we call evidence. So evidence is key. It's a key component of an assurance engagement. And as we shall be seeing later on, ladies and gentlemen, when we talk of evidence, for example, there are many ways of raising this evidence here. So for example, ladies and gentlemen, we shall be seeing great things. For example, you could collect this evidence using what we call RAEOU. So as an auditor, I've come in this case here to audit your organization. I will not be able to just use monkey guesswork here and there. We are not monkeys in a forest. We're just jumping from, no. Ours is very, very categorical, step-wise. So in this case, for me to be able to say whether the financial statements you're prepared are good or not good, then I'm going to do lots of digging. So for example, I'll be able to do what we call an inquiries and a third-party confirmations. So we'll be able to do what we call an inquiries and a third-party what here, and a third-party confirmations. For inquiry and third-party confirmation. So for example, I will inquire from the management. When they tell me, for example, that this is the depreciation amount, I want to know the criteria they use to calculate this depreciation. Is it straight line method? You guys give me your property, plant, and equipment because I must do what we call recalculation. I must do a lot of analysis, what we call analytical procedures here. When I do these analytical procedures, what am I doing? I'm gathering evidence. When I do these inquiries, what am I doing? I'm gathering evidence. Because these guys will come and tell me, hey, our receivables are $1 billion. I'll tell them, no problem. Let me circularize them. Let me talk to these guys here to see whether they'll be able to own up whatever information they send to me. I'll be able to organize them into what we call working papers. And then I prepare a file. So evidence has to be there. I'll be looking at this later, but evidence has to be there. And then lastly, ladies and gentlemen, it cannot be an assurance engagement if I do not do a write-up, a final write-up. We must give them a written assurance report where we express conclusions or what we call opinion. The person who typed for me this never typed for me, a very, very good work. I can see things missing here. But most importantly, is that the elements of any assurance and engagement, you must have a three-party involvement. There must be three parties. Number two, there must be subject matter. Number three, suitable criteria. Number four, we have evidence. Number five, we have what we call a report. Ladies and gentlemen, my name is Dr. Joshua Aura. I teach at RCM. Now in these 30 seconds, I'm taking this opportunity to announce that we have great online classes. So if you're interested with our online classes, please do not, if you want to study with us, any CPA from the very beginning, even ATDs, please get in touch with us and we shall be able to do what you're to give you great online classes. Our number is 0719 525 1,000. And then the ninjas who are following me on YouTube, now we have hit 30,000 subscribers. That's massive. But that's not enough. Please ensure that you are promoting this teacher by subscribing to his channel so that one day he'll get himself, in this case, here teaching at Harvard. No, he's going to transform RCM to the Harvard of East Africa. All right. Now, from there, we go to what we call reasonable and the limited assurance. Ladies and gentlemen, remember we have absolute. Normally starts like that, absolute. And then we have reasonable. And then we have limited. So in this case here, we also have what we call, just for my online followers, we also have what we call absolute. We also have what we call absolute assurance. Absolute assurance. Absolute assurance will be very costly. Absolute assurance will be very costly. There is no auditing firm that can ever provide absolute assurance. Because absolute means what here? 100%. We never prepared these financial statements. How do we give 100% guarantee that these financial statements are what here are correct? We can't certify like that. Because remember our work, ladies and gentlemen, as the auditors, we don't check everything. We normally do our work through sampling. You'll be surprised. Like there are firms that are under core CPAs that we are auditing today, whose revenues in this case are running into billions. But we don't pick like every invoice to check. No. Once I test internal control systems and then I find them to be adequate, I will, trust you me, I'll be picking a few vouchers here. I just go through them, a few invoices, a few receipts, do, for example, system audits, etc. The moment I realize everything is very okay, ladies and gentlemen, I can assure you, I'll be doing what we call small sampling. And once I get the sample to be good, then I'll be able to project the same now to the entire population and give an opinion depending on the evidence that I collect from a sample. So for us, then we can give what we call reasonable assurance. We can only give what we call reasonable assurance. We can only give what we call reasonable. We can only give what we call reasonable assurance. So when it is reasonable assurance, please listen, the practitioner gathers sufficient, appropriate evidence. What do? We gather sufficient. We don't gather like everything there, no. We just gather what is sufficient. Quantity-wise, what is appropriate? Quality-wise. So sufficient is quantity, appropriate is quality. This practitioner does enough work to be able to draw reasonable but not absolute conclusions. Please read this. Does enough work to be able to draw reasonable but not absolute conclusions. Concludes that the subject matter conforms in all material respects with identified suitable criteria. So then at the end of the day, we shall be able to say that the financial statements that we have been able to look at portray a true and a fair view. That in all material respects, there are no much errors. So we conclude that the subject matter conforms in all material respects with identified suitable criteria, the IFRS. And then I'll give the report in the form of a positive statement of opinion. We have what we call negative, and then we have got what we call positive statement of opinion. Ladies and gentlemen, we normally give reasonable assurances in statutory audits. These external audits here, we give what we call reasonable assurance because we do much more. It's not like the limited assurance. You know, limited assurance, ladies and gentlemen, limited assurance, there is basically very little you do, right? So you can't give a positive. Remember, the limited assurance, and the limited assurance, we shall be giving what we call negative statement of opinion, because we don't gather sufficient, appropriate audit evidence whenever we are doing limited. For us to be able to understand as I finish, I promise you can see this thing has come to an end. We're just reading this, and then we go home, and then we go home. Very few stuff here. Very few stuff here. If you just give me 5 minutes here, after 10 minutes at most, I'll be able to finish here. So what is a limited assurance and engagement? A limited assurance and engagement is a type of review where an auditor or a practitioner provides a lower level of assurance compared to a full audit. Full audit, we provide reasonable. You know, we start from up there, 100%, where we are giving a guarantee that these things are what here, perfect. But we're saying again, that one in practice is not practical. So from now, this absolute, we go to reasonable assurance. And then we go to limited. So limited, ladies and gentlemen, limited, we are giving what here, a lower level of assurance. That's why they're normally cheaper than these reasonable assurances. This means that the practitioner does not conduct a thorough examination, but still gathers enough evidence to make a reasonable conclusion about the subject matter. The key components of limited assurance and engagement. There must be evidence. The practitioner collects sufficient and appropriate evidence to ensure that the subject matter being assessed is plausible. Plausible means what here? Makes sense. Or reasonable based on the circumstances. This might involve inquiries, analytical procedures, and some review of documentation, but does not involve detailed testing of every transaction. So we don't do what we call substantive testing. If it's limited assurance, ladies and gentlemen, we do simple mathematics. If you remember what your teachers told you, and the limited assurance, we shall just look at the numbers. We shall look at the trends. So if somebody tells you, in this case here, for example, I assumed my revenue grew by 10% every year. So I'll just pick my calculator or put this data in Excel and see whether the revenue grew by. So I'm not going to look at, for example, this revenue, first of all, is it truthful? Was it, in this case here, for example, derived using, for example, IFRS 15? All right. So I'm not getting into really much detail. Here, I'm basically looking at, for example, the forecast. All right. So at the end of the day, I will be able to give what we call a negative opinion. Well, what do you mean with this negative opinion? Well, at the end of the day, I'll say that, fine, you know, here, the tests were very few. And with these few tests, nothing has come to my attention to make me believe that the financial statements are wrong. So you use nothing. You start with nothing. That's a negative opinion. Let's continue here, ladies and gentlemen. Key components of limited assurance. Key components of limited assurance and engagement. So we have number one, gathering evidence. The practitioner collects sufficient and appropriate evidence to ensure that the subject matter being assessed is plausible or reasonable based on the circumstances. This might involve inquiries, analytical procedures, and some review of documentation, but it does not involve detailed testing of every transaction. Example, suppose a company is presenting its financial forecast. The practitioner might review the assumptions behind this forecast, compare them with industry trends, and talk to management. However, they won't verify every line item in the forecast like they would in a full audit. Full audit, ladies and gentlemen, as much as it's not going to give absolute guarantee, but we do a lot of stuff. You know, if it's limited assurance, even if you give me like a forecast report to give a limited assurance, it'll take me like 3 hours. Let's check a few things. I'm not going to go through every line. And I'm not digging deep to get in this case here whether these figures were derived even very well. No, I've been given in this case here, for example, a budget against a criteria, the assumptions here. That's what I'm going to do. 3 hours, I'm done. Because here, for limited assurances, I'm not supposed to dig and dig and dig and dig. It is only in full audit where we dig and dig and dig and dig. Then we have here what they're calling negative statement of conclusion. After gathering evidence, the practitioner issues a report that includes a negative statement of conclusion or opinion, often phrased as nothing has come to our attention that indicates any material errors. This does not guarantee that there are no issues. We don't give guarantee that there are no issues. Instead, it implies that with our little tests, we are not able to get anything in this case that points to the fact that there are errors. All right. It implies that nothing significant was found during the review. Example, after reviewing a company's sustainability report, the practitioner might conclude, based on our limited review. Look at that. Based on our limited review, nothing has come to our attention that causes us to believe that the sustainability report is not presented fairly in accordance with stated criteria. This means that they found no major issue, but it's not a definitive guarantee that everything is correct. Practical scenarios, because especially the students who are doing AAA auditing and advanced auditing and assurance, these guys nowadays take you to what we do in the ground, on the ground here. They would want you to be very good in what is happening practically. All right. So like now, scenario one, practically, a small business engages a practitioner to review its financial statements before applying for a loan. This is very, very popular. At Aura and Co, we normally get this kind of assignments often. The practitioner checks key financial ratios and then inquires about the accounting methods used. They might report that nothing has come to our attention regarding significant misstatements, providing some reassurance to the bank. But this reassurance is what here is limited. It's limited. It's limited. All right. All right. Now, if you can see here, I have great emojis. You know, these are great emojis, ladies and gentlemen. If you look at these emojis here that I have, I hope you guys, there is nobody who is, the emojis I expect you guys, the face I expect you guys to be putting on, like this guy here smiling, that guy smiling like that. All right. We are overcoming, ladies and gentlemen. All right. Look at scenario 2, compliance reports. So under compliance reports, a non-profit organization wants to assure its stakeholders that it's complying with grant requirements. The practitioner reviews, I hope you guys know what grants are. The practitioner, who could be the auditor, reviews documentation and interviews staff about procedures. The report states that nothing has come to our attention about non-compliance, which helps build trust with donors without an exhaustive audit. If you allow me, I'll be able to move on straight away to accountability, stewardship, and agency. Accountability. Now, you see, like, for example, we have our president, we have our deputy president. These guys, given their positions, they are really accountable for their actions. Yeah, if you mess a little bit, in this case here, you could easily be impeached because of what we have put them up there. All right. All right. So they should be able to account for their deeds and misdeeds. You can even, if it's a Mzungu, if a Mzungu has done, assuming we have a Mzungu for president, and then they do something crazy, a little bit here and there, they can even resign. So whenever we talk of accountability, people in positions of power can be held to account for their actions. All directors are accountable, and that is why most of us, if you're not careful as accountants, we will even go to prison. At the moment, ladies and gentlemen, you are a director, you are an accountant, you are accountable. Like now, these directors are accountable to the shareholders for the decisions they make in relation to their company. The shareholders can easily fire them should they mislead them. This is very close to stewardship. You know stewardship? We expect you in this case here to push this business to another level. Yeah, we have given you resources. Please drive us correctly here. The responsibility to take good care of resources is what we call stewardship, known as a fiduciary relationship. Fiduciary means what here? It's a position of trust. We trust you'll be able to take us very well. Directors are the stewards of the company. Directors are required to produce financial statements giving an account of their stewardship. All right. And then now we have agency. And it's because of this agency, we normally have what here? We normally have audit. Because of course, like the 4 directors versus the 42 shareholders. We will be the agents. These 4 directors will be the agents of the shareholders. And the agents must always be monitored. And one of the best ways of monitoring them is to provide an auditor. When one party, the principal, employs another party, the agent, we talk of agency, to perform a task on their behalf. Directors are the agents of shareholders. External auditors are the agents of shareholders as well. Because you see, they have sent us. Ordinarily, it should have been those shareholders going to do audit themselves. But you see, they can't. They don't have the time. They don't have the expertise. So now I'm their agent out there. The company management are required to produce financial statements. You know, if you're at a position of accountability, then accounting, position of stewardship, then at the end of the day, you have to do accounting. You must do financial reporting. So company management are required to produce financial statements giving an account of the stewardship of the company at regular intervals. But there's a need for some kind of independent validation of the financial statement, the independent audit. Benefits and the limitations of audit. Benefits of audit helps improve the quality of information. Because when we go, ladies and gentlemen, through management letters, all right, we normally correct these guys a lot. So at the end of the day, they will be able to provide a higher level of quality information. Then we have, of course, independent scrutiny when they know that there is somebody who is quite independent following them up. Chances are things will improve here. Reduce the risk of management bias. Fraudulent errors here, ladies and gentlemen. Fraud and errors here. Fraud and errors. So, of course, we would want these financial statements to be prepared in accordance to some framework. Should we leave these directors without any audit, these guys at the end of the day, they will decide to do creative accounting where they are creating profits. All right. But once in this case here, you are there as auditors, then that biasness where these guys are simply leaning onto just one side to be able to enrich themselves, that will not be there. We are also reducing the risk of what are frauds in the company and errors. It enhances credibility of financial statements. Why? Because of the assurance. Would want, in this case here, more people to have faith in these financial statements here. Deficiencies in internal controls are highlighted through what we call a management letter. So at the end of the year, what I will do is to provide. The company has given me the job. I'll give them an audit opinion. And then number 2, I will give them what we call a management letter. So this management letter will be basically a letter of what here? Internal control weaknesses. In most cases, there we're discussing about internal control weaknesses that we came across as we were auditing. All right. So then at the end of the day, those deficiencies will be remedied. And does that mean that audit is the very best? I mean, there is nothing in this world that does not have disadvantages. Everything that has got advantages must be having disadvantages, The first one is that financial statements include subjective estimates and judgments. So remember, ladies and gentlemen, that even financial statements, the way they have been done themselves, there are a lot of estimations here. The same case with this audit. Yeah, there will be subjective estimates. So subjective means what? That at times you could bring auditor A, auditor B, give them same subject matter, same financial statements, tell them to audit. They may end up giving different opinions. So basically, there is a lot of subjectivity. At times, in this case, the audit lacks objectivity. And that is why you see like these big democracies like in America, now they're talking of joint audits, where they tell, for example, Ernst & Young, we have in this case here KPMG, you guys sit together. I mean, you're carrying this audit jointly, all right, to reduce on this subjectivity. Yeah, inherent limitations of the internal what here controls. Remember, these internal controls, ladies and gentlemen, no matter how tough internal controls you put, there will always be inherent limitations. Ya, kumbuka internal controls ni ile mitego. Kama ile Gachagua alitega. Hiyo Gachagua alikuwa ametega akasema mzee wewe mzee hawezi ukapita. I don't like talking politics, but at the end of the day, they bring these things out very well. So at times, ladies and gentlemen, depending on your company. For example, you can imagine like now this bank. These banks invest heavily on their internal controls. But is money stolen from them every other day? Oh, yes. Every other day, there are those money hits. Why? Because of the inherent risks, depending on the kind of business you're doing. These kind of inherent risks, and gentlemen, we also as auditors, they expose us a lot. There's a limitation. There are those risks. There are those limitations which will, I mean, we will not be able to get your end goal because of them. Representations from management may not be reliable. I don't know whether there is anybody who is an auditor here. If you're an auditor here, ladies and gentlemen, you'll bear witness with me. We are hated. There are places we go where people, if somebody gets you on some wrong corner, this guy can easily kill you. So you go to a company where people don't want to talk to you at all. And when they want to talk to you, they give you wrong information. So when you're being given wrong information like that, that is a limit. You're limiting our scope of audit here. So evidence, of course, is persuasive. It can never be conclusive because you're not giving absolute assurance. So we are simply going for reasonable assurance. We are doing sampling, and you can see here, they do not test all transactions. They only do what here? Sample. Then what are the expectations gap? What are the expectations gap? Ladies and gentlemen, there are times I'm telling you this is quite, it's a lucrative job. Auditing is a lucrative job. How I wish I began practicing audit immediately I cleared my university, and immediately I cleared my CPA. Audit, taxation, those things you cannot go wrong. But they're also hectic because of what we call expectations gap, where you know you're supposed to be doing this and this. My work is to give an opinion on the financial statement that you produce. But those guys, in this case, have got a mountain of expectations from the shareholders. So shareholders outside, they think that the moment you brought in an auditor, he is going to be the panacea of all your problems. That, for example, this auditor will be able to do our tax issues. They'll be able even to produce these financial statements for us. Those are what we call expectations gaps, and they keep on growing by the day. And that is why once you are given, in this case here, any job like today I was at Babadogo, signing some engagement letter there, you must always have an engagement letter that details the responsibilities of each party. So I'll start even with the directors. Your number one responsibility is to prepare financial statements. It is your responsibility to safeguard the company from fraud and what here, any obvious errors or any errors like that. So you state everyone's responsibility. My responsibility as an auditor is to give an opinion. And I will try as much as possible to put in safeguards that can help me detect any fraud. So it's about, in this case here, ladies and gentlemen, putting what is doable, what you're capable of doing. But we're not guaranteeing you that we shall be able to discover fraud. That's not our role. That is the role of what your directors, and that has to be very, very clear from the very beginning. That has to be very, very clear from the very beginning. All right? So expectations gap. Auditors test everything. Yeah, these guys will believe that we're supposed to be testing everything. That auditors detect all frauds and errors. What a lie. Auditors confirm the companies are going concern. Auditors prepare financial statements. Like these auditors with going concern. Remember like what happened with should have been PwC. It happened a long time ago. They audited Uchumi Supermarket. Down the line, before the year ended, Uchumi Supermarket went under. Shareholders took PwC to what? Here to court. PwC won. Because when we give, of course, our opinion, we are saying that we are, assuring the use of the financial statement that the company will be there for the next 12 months. That going concern issue, fine. But remember, as auditors, we're not going to give you absolute assurance. As we're giving you reasonable assurance. So should I give you a reasonable assurance and then the company collapses 3 months down the line, I'll be able to prove to court that, you know what, that is not my main responsibility. Going concern issues, that is what here, the management. Mine is to come and audit. Because gentlemen, you've come to the end of this particular webinar. It has been a pleasure hosting you. I would want to call upon all of you to join our classes here at RCM Online College. Yeah, and then of course, don't forget the fact that now our students are able to get help loans. They're able to get help loans. If you've got a brother, a sister, a friend outside there, CASNEB is giving up to Kenyan shilling 60,000. We're giving Kenyan shilling 60,000 to study at RCM. Of course, it's a loan, 6% interest, but you start paying it after 3 years. All right, 60,000 will take you far away. So thank you very much. I can see Maureen saying, thank you. So please don't forget to hit that subscription button. Don't forget to like my videos on YouTube. Otherwise, thank you very much. It is my hope that you guys have enjoyed. Gary, I've seen your question. I'll not be able to talk about it right now because I have a class early morning tomorrow. That's why I promised 20 minutes. But I'll be doing this. We can even have an arrangement for the students who have paid fees at RCM. We can have an arrangement where after 10 p.m., we simply meet, even if it's for 15 minutes, to do audit and assurance, both AA and AAA. And I'm so sure that can take you guys to places. So this video, you're going to put it on YouTube. Please, once you get it, share it with your colleagues. Otherwise, thank you very much. You're welcome. Good night and bye. Yeah, somebody's inboxing me, Mwalimu, I never knew that you know auditing like that. But I'm practicing. I'm a practicing auditor. I'll be able to teach, in this case, here, auditing from day one to day last without using any notes. Totally. Yeah, that's my work. That's what I do every other day. Thank you so much. Good night.